Hi and welcome back. Okay, here's another good combination of indicators to look at to see it when the market's in a strong trend. This is the Keltner channel here, and it's not really going to show you much different than like the 10-10 bands will, but it's just has a little different look to it, and for some people visually it might be easier to see. You might just like this indicator better, to make a long story short. And if you like this indicator better, that's great. Use it. And a good time is, if you thought a good time to look at the Keltner channels, for one thing, it's a good indicator to look at all the time. But a good time to look at the Keltner channels is when you think you got a strong uptrend. So what you could do is, if you're following the directional movement indicator and you get something that looks like this, which is how it looks like when it's in a strong uptrend. Now if this market was in a strong downtrend, it would be the same thing, but the green line would be above the purple line. That's the minus directional movement would be the stronger of the two for a downtrend. And the ADX goes up. It doesn't matter if it's an uptrend or downtrend. The ADX goes up the same, no matter if it's an uptrend or downtrend. That's just the way the indicator works. So that's the way the ADX works. But anyway, I just like the looks of this Keltner channel, and I think there's a lot to this to show you a strong trend. And then whenever market gets up into here where it's just totally away from this indicator, you can see that there's different things you could do. You could draw a trend line above when it starts making these bars start making kind of a sideways move. No matter how strong the trend, it's not going to go straight up, and there's going to be these little sideways moves. Like here's another one, a little sideways move. You could use this to draw a trend line above that sideways move, almost be like a bull flag. This would be like a bull flag here. And then when it breaks out above that, you could try going long with the stop below that. You could, when it's above the Keltner channels, you could look for a break of a 3-bar low and then take the next break of the 3-bar high as a buy signal. Again, that didn't happen on this corn chart. We'll take a look at beans here, where we looked at in the last video where it did do that. And Keltner channel is just another really good indicator. I hate to keep throwing so many indicators at you, but I just think it's important to know as much as you can. And then, but then in the end, you want to cut the indicators down to where you're not looking at, everything every time. But one of the secrets here is kind of knowing when to look at it. Like maybe the Keltner channel, you would just pull up whenever you thought the market was going into strong uptrend mode. So it's not something that you got to look at every time. That's kind of what I do with directional movement too. I might not always look at that every day, but then if something looks like it's really happening big on the chart, then I'll start taking a look at that. So some of it with these indicators is knowing what indicator to pull up when the market's doing certain things. So and again, you'll get the hang of that as with more practice and as we go through these videos more. But here's another good example of the beans went completely above the Keltner channels, and plus the directional movement indicator was saying strong uptrend. So there's a lot of good information here that you can use to your benefit. For one thing, we usually try to get in down lower here somewhere, but say you missed this move and all of a sudden it's up here somewhere. You can just buy, and if you can find a good stop point, just hold it, So it's just something you can kind of buy into the move, take a little extra chances because you can see that it's a strong uptrend. Now here's the bar I said that beans broke a 3-day low, which it broke this low here on this bar. So with the market action completely above the Keltner channels, and plus the Keltner channels are rising, so that's another thing to take into consideration. You could do is, again, you just would buy the 3-bar high, which would have been this bar here when it took out this high here, and then you can use the 3-bar low as a stop. And again, that's a very powerful trade setup, and I would say that that is something that hardly anybody knows about. That's just something that I kind of came up with on my own. I mean, again, I don't want to say nobody knows about it and I figured it out or anything, but it's one of those things that it's one of those little tricks that it can get you in a strong move. I mean, that's one of the things about a strong trending market. When it starts to trend strong, it's hard to hop aboard, even though it's one of the safest times to get into the market because the market is moving strong your way. It's just the fact that it's already made a big move in one direction, and so mentally you're thinking, well, this thing's going to turn the second I get into it. So it is hard to get into these strong trending markets, even though they can actually be the safest markets to get into, because if the trend follows through like this one has done here, like again, if this would have broke the 3 bar low and we would have went in and bought the 3 bar high, you'd be ahead already, and you could. And here's another little trick on this 3 bar thing. I talk about these 3 bar breaks, lows, and highs. Here's another thing you can do. What I kind of recommend is to leave your stop at the 3 bar low, because I just kind of like to give the trade a little work, a little room to work. But here's one thing to do if you really want to cut down the risk is every time you make a new trading day, you could move the stop up to the next bar. So what you would do on this one, if you were following that philosophy, is you would go long on this day, you would put a stop on this bar, with this pivot low bar, and then when it made this bar, you would move the stop up to this bar. So you're using the 3-day low as the trailing stop, and you're just moving it up. So every day you're at the 3 bar low. So then when it made this bar, you would bring the stop up to this bar, and you would basically have your trade almost at break even. And then on this bar, you would bring your stop up to below this bar, and you'd be closer to break even. And then what's probably going to happen here is you're either going to have some more sideways movement or a little down day, or else the market's going to take back up, and then basically you'll move the stop up to this bar, and it's a way of cutting the risk on the trade very quickly. And then another little thing, and then you could just follow up 3 bar low the whole way, or what you can do is once you get to break even, you can just hold the stop there and then just wait and see and let the market work its way out. So one thing, always try to be creative on this stuff and just be thinking, what's a little different way I could do it? How could I do it different this way? What could I be doing different now? Okay, we talked about using the 3 bar low for a stop here, and then you could follow the 3 bar low all the way up. That's one example. You could follow the 3 bar up until you got at break even and then hold. And then another thing you could use is once you got into the trade, you could use the ADX, wait for that to turn down, because usually what happens on these markets is the ADX will never make a new low. It will make on a very strong trend, it's going to make a new high reading every day. Like this bar was 34.75. And even though this day, Friday, the market went down, the ADX made a new high reading, 36.75 up there. So the ADX, even when it has a down bar, will keep rising on these strong trends. And then what you could do is once you enter the market, you could just hold your stop at your original stop level. You could bring it up to break even, and you could just wait for the ADX to turn down before you got out of the trade. So that's another way you could do that. Let's take a look at crude here. Here's one that might be just starting out, and we are in crude oil as far as ETF and the premium stock newsletter right now. Crude, I don't trade it too much in this futures newsletter, just for the simple fact that it's just such a high risk market. I think the way to go on crude is do ETF if you have a stock account. Now the ETF for crude is USO is the symbol for that. Okay, this isn't a real clear example. Well, I guess on crude, here's a good example of where it went below the Keltner channel, and so this is a good example of a downtrend, which I really wasn't planning on showing you. So that's how, if you look at these charts, you can just find things. And here's where the green line was above the purple line, which was the minus line was above the plus line. And see how the ADX rose here, and then 46. I'm looking at these ADX readings. See, the ADX went all the way up into the high in 54.91, 55, 54. So this bar here was the first bar that the ADX turned down on. So let's say somehow you would have got and And again, it looks like you would have gave up a lot. You know, there's a lot more downside, but that's not a whole lot of downside left from there. 85 and 78. Well, that is kind of, but it is a place to take your stop. It's not to take your profit. It's not always going to work perfect, but it's one place to consider getting out of the market. So anyway, basically, when this went below the Keltner channels, that was an opportunity to get short. Now let's kind of look at this 3-bar thing here and see where if any 3 bars were broken. See, none of these. There wasn't a 3-bar broken yet. Now here was a 3-bar high broken on this bar. This bar's high was broken, and so here's 3 bars. Here was a high broken. And then here's what you could have done. You could have, when it broke a 3-bar low, which would have been this bar's low on this bar, you could have went short here. So, and then here a 3-bar high is broken here, and then the 3-bar low was broken on the next bar, and that would have got you in the trade. And then here, and again, you'll just have to kind of go over the charts, and you'll get used to looking at these 3-bar high and low breaks. And here a 3-bar high was broken, and then you could have went short in here somewhere, and then that would have been kind of a tricky one because you were getting kind of towards the bottom of the move. Now what I suggest on these 3-bar breaks and getting in these strong trend moves is you want to get in as soon as you can in this area, because once you get down here, it's going to be choppier. It's going to be, you know, more counter trend moves. And then what'll happen is, like with a lot of things with trading, you'll get the bravest right at the worst time when you'll say, man, this thing is just going down forever. And then you'll get down to here and you'll think, I'm shorting this thing, and then the next thing you know, it's made a bottom. And you want to be as quick as you can and get in as quick as you can, and that would be up in this area somewhere. But anyway, so that's another little lesson on how to use the 3-bar high and low breaks. Directional movement indicator, Keltner channels. Now here, crude is starting to move above the Keltner channels. It hasn't really, I wouldn't really consider this to be, you know, it hasn't really moved completely above the Keltner channels yet. Obviously this bar here. It takes 2 or 3 or 4 bars, whatever. You just it's gotta be obvious that it's above the Keltner channels. But I kind of consider this like a Keltner channel high breakout, and then it did move above this bar's high. It's kind of like our 10-8, 10-10 bands that we look at. And this has gone on a buy signal, and it hasn't crossed back below the green line yet. Let's see. Sometimes you got to look at the numbers. So this is now if crude would take off from here and go up, and this thing wouldn't have broke below the green line, and then we could get a strong move with the plus line up here, then this would start to be looking like it could be starting a strong uptrend. Now if we put in Monday, Tuesday next week, this is the weekend right now, it's Saturday night here, July 7th, and if we start getting up in here above the Keltner channel, then that's where you start saying to yourself, okay, this could be making a strong uptrend. And then you could use your 3-bar breaks, or you could just let's say in the stock newsletter we bought, which we did, we bought USO on a break of this high. So we're in at I think a pretty good spot. We got the stop at the last pivot low, and let's say we're already long USO, and then it gets up in this area somewhere, and the Keltner channel turns, and everything, and the directional movement starts turning bullish, the ADX starts rising, and all of a sudden you say, okay, a strong uptrend. It just looks. Then what you can do is you can pyramid up and buy like another however many shares you wanted to a USO. And then another good thing about that is, let's say you hit it right and you buy another 50 shares, and then it moves your way right away. Well, I said 50 shares. What we did, we bought 50 shares on the original position. So let's say if you bought another 50 shares on this position, I mean, it would be how many shares you wanted to, but I mentioned 50 shares, so that's where I got that. That's what we bought so far is 50. And then in my stock newsletter, if it did get up here where it was strong uptrend mode, I would buy another 50 shares. And then another little trick to do on that would be, if it moved your way right away and you got, say, a couple $100 profit, sell 50 shares so you got some kind of profit locked in, and then it makes it easier to hold your original purchase. That's another thing that we're going to be going into some lessons. I don't know if I've mentioned it on any videos before, but anytime you can trade like a position, like 100 shares, and unload half, like 50 shares at a profit, that just makes the trade easier, because then you're in kind of like a free trade, because even if the market were to move against you, chances are you wouldn't lose money on the trade. So it's nice to, like, say if we would have bought 50 shares here on a strong, and let's say the market moves up here and we buy another 50 shares for a strong trend move, and this market goes to the moon, of course it would be nice to hold the whole 100 shares all the way to the top. But the reality of trading is these markets can turn quick. So anytime you can unload part of your position, I'm a big believer in that too. And again, there's different, it's kind of depends on your personality and how you want to trade it. I mean, if you see a strong trend move and you just absolutely want to hold it, that's fine. But I think if you can unload some of the shares into strength as you're moving up, that's a good way to do it. And the other thing is, I'm a big believer in is holding a small amount of shares. Like, I don't like to just get a move my way and then just sell everything, because then if it keeps going, you're totally out of the trade. So that's one thing we're going to talk about more. Maybe I'll do a video about that tonight. I don't have anything to do at Saturday night, so maybe we'll talk about that strategy a little bit here in a minute. Anyway, that's it for this video. Thanks for listening. This is Jim again, and I hope you're enjoying the videos, and I hope you're finding some profitable ideas. And we're going to keep going, and we're going to keep going, and we're going to keep going. So here we go. I'm going right now.